Right now, we have a raging bull market in insurance. So you don't hear much about it because talking about insurance, sometimes it puts people to sleep. But between strong pricing power and high interest rates, which allow the insurance companies to get a better return when they invest your premiums, the whole group is on fire. Take Chubb Limited, the diversified insurance provider that's best known for its big-time property and casualty insurance franchise, but there are many others. Here's a stock that's up almost 38% over the past year, yet even after this move, it still sells for just 12 times this year's earnings estimate? That's mystifying. Plus, last month, Chubb got a major vote of confidence when we learned that this stock is the mystery position that Warren Buffett's Berkshire Hathaway has been teasing about for the past couple of quarters. Now, the current price seems ridiculously low. So should you join Buffett with a position in Chubb? Let's take a closer look at Evan Greenberg. He's the chairman and CEO of Chubb, and for my money, one of the sharpest executives in the insurance industry. And, of course, he's also my insurer, Mr. Greenberg. Welcome back to Mad Money.
Jim, it's good to be with you.
Well, I've got to tell you, you hit it out of the park again and again, but there's nothing like Warren Buffett giving you the endorsement. And, of course, he has Geico, which isn't as big as your company, but is still huge. So what's it like? What was it like to know that the mystery buyer is buying you?
You know, first of all, I know Warren, and I have an amazing regard for his capabilities. He may be the world's greatest investor of his time, and what a builder. What he has accomplished speaks for itself, and that he would, and he knows insurance, over 40% of his business is insurance, and that he would choose to invest in Chubb and become a significant long-term shareholder is so gratifying and such a vote of confidence. We're honored.
Now, I would also have to believe, like Occidental, he can continue to buy. He doesn't have to tell you. He's allowed to buy all he wants.
Well, that's exactly right. And it would be better if he isn't telling me, because that's a disclosable event.
Absolutely. Now, I want to talk about your business. This is a halcyon time to be in your business. That doesn't mean everybody makes a lot of money. And what I want potential investors to know, you know how to underwrite. You know how to do it profitably. It's very clear from all your materials. Not everybody does. What's the difference between someone who knows how to write, who knows how to price, and the people who are just out of the league?
We're in the risk business, and in the risk business, it's about how you structure risk. First, how you conceptualize and understand it. Then, can you structure it and price it properly? And if you can do that, then you can assume it. The art and science of that is what they call underwriting. That is the soul of who we are. Every company that is successful, the wellhead of success is, first of all, to know who are you and what is the purpose for which you exist. Ours is to underwrite and to assume risk. And by the way, you assume it when you can be paid properly on a risk-adjusted basis for taking the risk. And if you can't, you shrink, you walk away. Very few. Everyone will say, oh, yes, I walk away when it isn't priced or structured right. But very few are willing to pay that price and shrink. We've proven that over 20 years. In any business where we fundamentally can't achieve the right return, we will walk away.
I think you can do that. One of the reasons why is because there's a perception in this country that I think now is true. When I was growing up, my father said, listen, one day maybe you'll be wealthy enough to be insured by Chubb. This is a 70-year continuum where people still say that. How did it happen that Chubb is the one that we always say pays? They pay, versus the others where they say, I hope you get paid.
You know, look, Chubb, let's just start with what is the company? We're a global insurer where 60% of our business is in the U.S., 40% is outside the United States. Our two biggest regions are North America and Asia. To me, the two regions of the world with the greatest potential for growth over the next 15 or 20 years, all industries, economically speaking, in a broad sense. In the United States, we're the largest commercial insurer of businesses of all sizes. We're the largest insurer of agriculture. We're the largest insurer, and this is what you mean and know us for, of affluent people. And we dominate in that business. It is the wellhead of our brand, and it's known for the quality of the product, the richness of the coverage, and the service we provide. The halo that business has provided has really been a halo across our businesses. And it speaks to our ethos and our culture. It's not about simply the letter of the policy. It's about the spirit of the coverage we sell. And to provide the spirit of that at claim time and at engineering time to our customers.
And that's why I am perfectly willing to pay, because I know it's premium. The same reason that I want a premium broker for my capital. But what I don't understand, right now, CPI, they keep saying insurance is something that's intractable, that goes up. Well, look, if you're well off, you should pay. Your stuff is increased in value. You better pay. But why do you think insurance in general has gone up so much?
Loss costs. Yes, we've come off of a period of 20 years, just think of it generally, of low inflation. Low inflation, everything, and negative rates, negative real rates. We've been in a period of general inflation, and then there's inflation that's particular to insurance. So general inflation would be wages, would be supplies, parts and labor, all the rest. But what's particular to insurance, climate change on one hand. Climate change has created tremendous volatility, and it continues to evolve. And the concentrations of values in areas where the climate, the impact of the climate is greatest, continues to increase. Number two, litigation costs. Litigation in the United States is now 2.5% of GDP. The litigation industry is just that, a money-making industry, i.e. the trial bar. And they're very well organized. And now you have litigation funding as fuel on top of that. And they constantly perfect new theories of liability, and who pays for it? Corporate America, and in turn the consumer and the taxpayer. But litigation expense, insurers, we don't have the printing press. We intermediate money. We don't produce money. And so therefore, reflecting loss cost, when you think general inflation, when you think climate change, when you think litigation, that is driving the pricing of insurance.
And for those who disagree with that, you've got to read a shareholder letter, and you'll understand why it's a tax on you, okay? Before you make a political judgment, it's a tax on you. One of the things, China, you have written passionately about the need to engage. It's also a tremendous opportunity for Chubb. You're a leader in this country in business with our relations with China. Give me the state of play and how you feel things could go right or wrong and what we can do about it.
You know, right now we have what I'll say is tactical stability. Both countries need the stability in the relationship. The U.S.-China relationship and the rivalry and the competition between the two colors all geopolitical events today. It is the one constant around the world. And you said it, two great powers, the two largest economies in the world, both nuclear armed, each wants to pursue its own vision of greatness, its own prosperity, its own sense of greatness for its people. We have to find a way to coexist. And it's only going to happen, that coexistence, where we can, because think, if it isn't coexistence, then it's the opposite of coexistence.
And that's why, again,
one of us doesn't exist. And what that means engagement.
I want everyone to read this, move my view about how we should approach with China, because it's rational. The most rational shareholder letter I have ever read, and very convincing. I want to thank Evan Greenberg, Chairman, CEO of Chubb Limited and Chubb Group. Thank you so much. Great.
Jim, thank you. Thanks for having me.
Yeah, money, right back.
Coming up, hit us with your best shot. An electrified fast fire lightning round is next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.